HDFC Bank is the second largest bank in the country, but let's try and break down what the size means and the Q4 numbers, because that's what they've come out with their Q4 business update. And let's try and break down all of those numbers and try and demonstrate how large this bank actually is. So point number one is the second largest bank in the country. It's the largest private sector bank in the country and is the second largest bank behind State Bank of India. It's roughly half the size in terms of advances as well as deposits to State Bank of India. But at the same time, it's growing at a very, very solid clip. It's grown the first piece, its deposits, by a solid 20% year on year. To try and digest this is to try and say that the system growth currently of deposits is just 10%. So it's grown at twice the growth rate of the system growth. Largely, SBI also is growing its deposit book by 10%. Its deposit book is roughly 42 lakh crore. HDFC Bank's deposit book at the start of the previous FY23 financial year was around 15.6 lakh crore. It's actually gone up from that 15.6 lakh crore mark to 18.8 lakh crore. That's a very, very solid increase. And within that 3.2 lakh crore that it's increased its deposit book size by in the full financial year, out of that 3.2, 1.5 has come only in Q4. So 46% of its cumulative deposits which it has garnered through the year has come only in Q4. That's the substantial size with which it's grown at only in this particular quarter. 8.7% is what it's clocked in terms of quarter on quarter growth, and 20% I did mention is the year on year deposit growth number. Very solid despite a very high base. Let me quickly move on and compare this particular deposit growth with the likes of, say, a Kotak Bank. Kotak Bank's overall deposits is roughly 3.4 lakh crore prior to this particular quarter numbers, that is. So at the end of Q3 FY23, the total deposit of Kotak Bank, the entire deposit book, was 3.4 lakh crore, and that is been done in a single year by HDFC Bank. That is just in this particular financial year. So clearly there don't seem to be any signs of this bank slowing down despite the size going up. And we'll talk about that a little more. Before that, let's talk about the advances growth. Now, at the start of this financial year, FY23, HDFC Bank had advances of 13.7 lakh crore. It's ended the year with a 17% growth in its advances. So taking the 13.7 lakh crore to 16 lakh crore. That's a substantial jump in any case. What are the levers it's using to grow this particular book? It's using its commercial and rural banking, which is growing at 10% quarter on quarter, which is around 30% of its book, which is growing 10% quarter on quarter in Q4. It's grown, and it's growing 30% year on year over the last year. That is a very solid and healthy clip at which that particular piece of business is growing. The other piece is the retail pie. That has grown 20% year on year and 5% sequentially. Clearly no sluggishness in either of these, but the corporate book is where they've slowed down their growth a little bit. Now in the same time in the last quarter, what they've suggested is that there is a bit of mispricing that's happening in corporate, so they want to avoid taking that risk. And that's why they've stayed away. Of course, commentary on in this particular quarter is still awaited. So we need to wait and watch as to why corporate hasn't grown at a healthier clip, if I can call it, or why they've held back on growth there. So that's something that we'll wait and watch out for. But that was the commentary last quarter. Largely may likely be the same commentary even in this quarter. But in terms of sheer size, it continues to grow 17% on a very solid 13.7 lakh crore balance sheet is very, very solid nonetheless. Let me move on. Let me try and break down the market share of HDFC Bank in both of these quadrants, in both of these deposits and advances. So in FY18, in deposits, HDFC Bank had a market share just below 7%. 6.9% was its market share in FY18 in terms of deposits. FY22, that has gone up from 6.9 at the end of FY22 to roughly 9.4%. So that's a very sharp bump up that we've seen in terms of market share, and it continues to gain market share because the system growth for deposits is 10%, it's growing deposits at 20%. So likely even in this particular year, it's continued to shore up on that market share of deposits. Let me quickly take it to advances. In the advances space, it had a 7.6% market share at the end of FY18. Now that 7.6% reached 11.2% in FY22, a very solid growth over the 4-year period. It's gone up a solid 3.6% in 4 years, which is this is the overall size of the loan market within the banking space in India. So that's quite a large, substantial chunk which it continues to acquire year after year, right? And that also continues because what we saw over the last year was credit growth roughly ranging between the 10 to 16% mark. HDFC Bank has grown at 17%, which means that it has continued to gain market share even in this particular space. Now, let me talk about the future, right? What the expansion plans are. One is, of course, that the merger between HDFC and HDFC Bank is going to play through going forward. And one would have to wait and watch as to whether this kind of a performance can sustain post the merger. And that's one piece that many analysts are slightly apprehensive about, that on a book size of 23 lakh crore, currently at 16 lakh crore, plus the 7 lakh crore that HDFC Limited has in its loan book. So total book of 23 lakh crore, can HDFC Bank continue to grow at 15 to 20%? So that's one concern. But let's talk about the expansion itself, right? HDFC Bank had around 6,300 branches, right, at the end of FY22. Currently, it has around 7,200 branches. And what it committed to at the start of last year is that they will go into an aggressive branch expansion mode and they will grow branches by 1,500 to 2,000 branches a year for the next 3 to 5 years or so. So if that is the clip that they follow, then technically speaking, they are going to grow their branches in a very, very solid manner, and it's going to reach maybe 12,000 branches in the next 3 to 4 years, right? And let's talk about where SBI is in terms of branches. So HDFC Bank, half the size of SBI, but branches are 6,300 at the end of FY22, 7,200 now. SBI, which is twice the size of HDFC Bank, has 22,000 branches, right? So at 22,000 branches, that's almost 3x of what HDFC Bank currently has. So there seems to be a very large tailwind which HDFC Bank has in terms of its branch expansion, which it can continue to make going forward into the future. So in terms of expansion, there seems to be a good amount that HDFC Bank still has to do, and there are still growth levers available for it to try and catch up with the largest player, right? So that's point number 2. Lastly, let's talk about profitability. Now, HDFC Bank over the trailing 12-month period has exceeded 40,000 crores in annual profitability over the last 12-month period. And it's beaten SBI in terms of profitability in FY22. So, despite it being half the size of SBI, it's beaten SBI in terms of profitability. Now, it's likely that this year SBI will bounce back and beat HDFC Bank in terms of profitability, largely on the back of a lot of write-offs that SBI had taken in FY22, which now has not come through in FY23. So you're seeing a bit of a cleaner book on SBI, and which is why it will catch up in terms of profitability, but nothing warranting a double in terms of the size of the book to have pretty much the same profit. So currently HDFC Bank has around a 43,000 crore trailing 12-month profitability. It's gone up almost 2x in the last 4 years, and what it's also done is that the profits have gone up by 11x over the last 12 years, and revenue has also gone up roughly 8x in the last 12 years. So we've seen a very solid tailwind that HDFC Bank continues to witness, but it's also seen that over the last 10 to 12 years in terms of consistent performance. So just to try and break down how large it is and to try and break down how efficient it is what we've tried to do in this video.